Hello, everybody. 'Tis I, the Rumpled One. It is Friday, March 2nd, the year 2018, weekly wrap-up. Okay, it's been quite the week here, hasn't it? And as always, we've got the money and risk management screen. I hope you've been employing this since I've been making these videos, paying attention to it. Okay, what is going on with my mouse today? It is acting strange. And let's see, we're looking at dollar Canadian this month, and you can see here the weekly open. It broke into the wick zone, and it broke through the high, and you see what's happening here. You look, 261 pips away from the weekly open. So that was a nice trade there. And once again, for the week, the gap's filled. Looking at the daily, you can see here yesterday it broke through the high, only about 9 pips difference between there, so that was a small trade. You can see here the wick zone from yesterday was pretty substantial. Now, when you see these types of wicks, a lot of times, price will retrace. Sometimes, but then again, you have one here, price didn't retrace. Only difference, this is green, this is red, might give you a slight clue on whether or not you're going to get that nice retrace. Here's one, there's a green, but you see it only went about midpoint of the that upper wick zone, then retraced. Once again, the midpoint playing a role. Midpoint's pretty strong. Might have to do another video on midpoints as a refresher to some of those who didn't follow my work from years or actually decades ago. And you can see here the daily open, 57 pips above it. The range here looks nice. We got 85 pip range. Got a few over 100 for the day. Lots of movement. The pound pair's moving. Except for the pound dollar, only 61 pips. And once again, you can see the buy zone, dollar Canadian, not much happening in the Australia-New Zealand session. You can see here we get into the Tokyo session, and it kind of broke through here in the London session. So once again, lesson to be learned, Australia, New Zealand, Asian session. Make sure it has either Australia, New Zealand, or the Japan somewhere in one of these, either the quote pair or the base pair. Really simple, just kind of common sense here. And you can see here we put in this upper rat zone, and prices tried to leave it, but we're still up here. Looks like it wants to be 129 and then have another reversal off of that, maybe to the downside, or maybe it wants to be 130. And for the pivot point trade, you see the open line, you see the pivot line, you take that trade, that filled. That's one of those trades you can usually make money on a regular recurring basis. Here we're looking at price action, price action, price action. Really simple stuff. As you can see here, it failed to make a new high, so it reversed, but once again, green at the line, could have made 10 pips or more. So you just follow some of the simplest rules of thumb and you can make money. One of the things that I always struggle with as a trader is, you see here, you see 128.10, you see 129. You want to capture that whole run. You really do. I rarely capture those runs. Usually what will happen is, I'll enter the trade here, and then it's like I've got a winner. I don't let the winner turn into a loser. So I might stop out right here at +1 pip. And then the same goes here. I might stop out at +1 pip. And then the same goes here. I stop out at +1 pip, you know. And then maybe if I catch this one, it doesn't hit it. And then you get the run. But usually that's not what happens. You know, it's I'll get caught with that +1 pip. I was talking to one of my trading buddies on the phone, and it's just like, well, you know, a winner's better than a loser. I said, yeah, that's true. But then again, you know, sometimes if I'm in just a pure scalping mode, you know, I'll take those 3-5 pips over and over again. But I mean, even right here, you can see, you get in that trade right here, and you're up. If this is the time, and then boom, you're out at that +1, and then it just takes off on you. And see, once again here, if you go long here, it comes back, it'll take you out. Take out that +1 right there. You're getting taken out again. Same thing here. You would have been taken out. Right here, same thing here. You would have been taken out. So that's why sometimes you might just want to go ahead and grab those 5 or 10. You can always exit half of your position and let it ride. But as I've shown you in this case, you would have been taken out. You don't get the ride. So the question is, are you greedy? Not really. Now, that being said, we could have played this a whole nother way. If you really want to go for the gusto. And so you see here this 2-ball at the end. This is where you would put your stop loss. You know, maybe at 128.09. So you enter the trade and you go, I'm going to stay in the trade. I'm going to give it however many pips difference. Maybe it's 20 pips. You put your position size accordingly and you just walk away. And then you see what the market gives you. You know, problem is sometimes, you know, you might see you are up 10, 20, 30 pips and next thing you know, bam, it comes crashing down and takes out your stop. And so, you know, but that's just trading. You know, sometimes you're going to get stopped out like that. Sometimes you're going to catch the big run. You have to decide as a trader your style, you know. And for me, my demeanor, my personality, you know, whatever you want to call it, I'm much more successful grabbing those, you know, 3 to 5 pips over and over and over again than trying to capture the big one. Every now and then I do catch the big fish, you know, but most of my fish stories are the ones that got away. I mean, that's just the way it works. You know, I'll go in and I'll grab my quick, you know, 5 or 10 and then the sucker just runs. But, you know, that's just trading. If somebody could predict it, you know, it's a whole lot different. But I mean, you know, you can look here and see, okay, we've kind of got here, we got a low, a lower low, a higher low. You might say, okay, if it breaks down into this area, this is where I'm going to stop out. But everything else, just let that sucker wiggle, and hopefully it wiggles its way to the top rather than it wiggling the way to the stop. And, you know, you can look at some other things like you go, oh, green weekly. Yeah, maybe I'll trade that, you know. Now, if this was a red weekly, then maybe it's better to, if you're going long, you might want to be grabbing the small pips. But with the green weekly and the green daily, you might say, hey, let's just ride. Let's see if we can ride that for as much as possible. Sometimes it works, sometimes it doesn't. I mean, that's just trading. So anyway, maybe that might help somebody. Let me know. 5 lines. Once again, the previous day's high, mid, close, open, low. H1 candle color at the line. You see here is profitable there. You kind of got faked out those. But once again, dollar Canadian, the New Zealand Australian session, you don't trade dollar Canadian during that session. It really doesn't make sense to. No, you want to trade, one of the Aussie pairs or one of the New Zealand pairs the first 3 hours. I mean, here, let's just look at the difference. First 3 hours, look at that. Look at the movement. Let's look at the Aussie. You see, once again, you've got some movement there. That was opportunity. See, right here, boom. So, if you're going to trade this time of day, trade the pairs that move that during that time. Pretty simple. At least to me. Other people might have a different opinion. And then again, looking at the wick zone, price doesn't like staying in. You can see it went out. But remember, we got these huge wicks. But you see this huge candle to the downside? Well, they had to come back and hit it again. That's what they're doing right here. Whenever you see these huge candles like that, just think, wow, that was all in 1 hour? Huh, there must have been some sellers here. So they got to come back and fill some more orders. So you see that, have the discipline, you let that candle close. You see this one, it kind of went up, kind of went down, came back to here, tested, low, lower low, higher low. You can see here what happened. You can see probably here, this was the lowest. We're looking at wick zones, but you can see here, this was a low H1 open. Could have probably gotten in there. You can see here, tested it again, and then took off on a holo. But you can see what happened in the wick zone too. And now we're looking at the holo zone. And scrunch the chart up a bit, and you can see here what happened. You see, it dived down in here. That was the lowest for the day. You see here, there was a lower one preceding it, but because we're looking at the day, that was the end of the day. You have that low, lower low, higher low. See that? It's not making it's not pushing down. So you take it to the upside. Just doing some simple analyzation. It's not really analyzing. It's more observing. You're just looking and seeing. I mean, what do you see here? Now, what do you interpret? What do you see? Big difference. I should probably redo that video too. Really about trading what you see. What do you see versus what are you interpreting? Because too many people interpret. They don't see. And we've got the tick chart. I don't know, guys, traders, tell me, do you like seeing this tick chart, or should I just not even show it anymore? I'm just curious. But anyway, that pretty much wraps up the week. Thanks again for, watching and commenting and asking questions. I hope I've covered the questions that I saw for the week. Let me know if I missed yours, and I'll try and get it in next week. So, once again, I hope you had a profitable week. And as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off to start the weekend. And next week, we'll start draining the banks again.